Hi everyone, my name is Vivek Ramachandran and I head up innovation and growth for the commercial bank and HSBC globally, based out of Hong Kong. We're talking about innovating in a big company and innovation in banking. I know it's kind of obvious, but it's quite important to define what we mean by innovation to start with. Because in large organizations, it's easy to define all digital activity as innovation. And that's quite misleading. So it's really important that you don't equate digital with innovation. Innovation, in our case, how we define it in HSBC, is either activity working with unproven technology, working on new business models, or activity that is disruptive to your core franchise. And it's really important that you pursue activity that is disruptive to your own franchise within your organization, but you do so in a particular way. So with that as the context in terms of what I define as innovation, I think there are two important questions. The first is, what should I do? And the second, how should I go about doing it? Okay, so what should I do? It's a little like when Alice asks the Cheshire Cat, which way should I go? And the cat replies, well, it depends on where you want to go to. In a large organization, we know we need to do something. Our world is changing. Clients are getting more sophisticated. Platform-based models are emerging. Fintechs are trying to compete and eat pieces of the pie. You have regulations changing what we can and can't do. And then finally, new technology is fundamentally changing our world. I think it's really important that you define an objective for your innovation, and ideally a client-facing objective. So we at HSBC have defined 4 particular objectives for innovation in commercial banking. Reinventing SME banking. For those of you looking up there, I have no slides, so you're going to keep looking at me there or over here. Reinventing SME banking, digitizing trade, redefining payments, and strengthening client connectivity. Let's look at those and why we've picked those. SME banking, small and medium-sized enterprises are fundamentally different. Many of you are SMEs, and you look and feel fundamentally different from what an SME did 10 or 15 years ago. You're becoming international earlier, you're much more sophisticated, and you're demanding more of your banks. And we think the old model of banking is not going to serve the majority of new emerging SMEs. Digitizing trade. In our heart, HSBC is a trade bank. That's how we started. And trade is central to the lifeblood of most economies and companies, but it's painful. It's incredibly difficult to transact internationally, and it's paper-based. So we want to lead the industry to paperless trade. Redefining payments is obvious, but I'll touch upon the last one, which is probably the most important to us, which is client connectivity. The world is full of fintechs or new players trying to solve the needs of companies in individual markets, because your individual needs tend to be idiosyncratic. The multi-country needs of clients are fundamentally being underserved. And that's been important to us because we are an international bank and we think that plays to us. So being really clear about what you want to do from an innovation perspective is absolutely central, and it's important in what you do is being clear on what you're not going to do. And that's exactly where large organizations strip up, because it's easy to say yes to stuff, it's difficult to say no. And your objectives need to make sense for you, but not necessarily for everybody else. So hopefully, as you work through or you work with large organizations, you're working on specific objectives that are client-centric. The second question is arguably the tougher one, which is how do we go about doing it? And I have 3 points to make here. We all hear the mantra of fail fast, fail forward, fail quickly, and failure is not a bad thing. I disagree. I think some kinds of failure is particularly bad, and you just need to define what failing means. Failing in an innovative culture is not learning. Not having a learning cycle is what failure means. So if you launch a product and it doesn't work, that's not failure. But if you launch a product and it doesn't work and you haven't figured out why it doesn't work, that is failure. And that's really important, because the historical world was not that historical. The product manager would write a 50-page specification, hand it over to the IT guy, and it's hit and miss as to whether you get back what you wanted. In most cases, it's miss. And then there's a dialogue between the two as to who didn't do their job. In the new world, it needs to be much more dynamic with learning built into the cycle. The second point I'd make in terms of the how is design is really important. It's easy to overplay technology when you think about innovation, but the key differentiator in terms of solutions or products that work and that don't work is design. And client-centric design is really difficult. Banks, financial services companies, typically, if you think about, I'm an economist, and you think about it maximizing a utilities function subject to a budget constraint, we think about the budget constraint. We don't think about the utility function. But our products give utility to our clients beyond the financing. And it's important we think about the design. And thirdly, it's important that you divide your organization. If you present an idea for innovation and everybody agrees to it, you're not being innovative. It's difficult to be radical if you're not dividing opinion. So you need to be unorthodox about how you think about partnerships, how you think about what products you do, and how you think about your business model. Let me try bringing all of that to life with one practical example. Many of you would have seen the announcement we made a couple of weeks ago about the first blockchain transaction, where we had a letter of credit transacted on a distributed ledger platform end-to-end for the first time on a scalable platform. And I bring this up because we think this is a pretty momentous step towards digitizing trade. The last big innovation or invention that came out of global trade, which arguably was the single largest factor that's reshaped our lives and the global economy, is the shipping container. The standardized shipping container is as young as 60 years old, right? So it came about during Vietnam War, which is a 20 by 10 by 80 container. Till then, you had scenes of Grapes of Wrath where you had dock hands actually moving cartons and then moving bags from one container to another. And the reason why this proved so difficult is not because containers didn't exist, but because you didn't have one common metric as to what a container needed to look like, because ports, shippers, railways, and truckers all needed to use the same definition. So transforming that industry took market leadership from the individual leaders across the verticals. The largest shipper, the largest port, the largest truckers, and then the customs, and everyone need to get on board. So we think taking paper away from trade is going to require the banks, the shippers, and the regulators to put the customer ahead of themselves. There's no reason why you need to have paper moving across multiple digital islands. So it would take you a day to ship oil from Singapore to Indonesia, and often a week to get the paperwork done. So the reason I bring that up is there were three things that made the project we did interesting and different. The first is we built it in collaboration with 11 other banks. Banks have historically been loath to collaborate with each other. We've competed with each other. The second is we built it knowing that we're going to donate it back to the industry as a utility. We're not going to monetize it. We could make money off it in the short term, but then it'll become yet another digital island, and our large competitors would go build their own digital islands. So this needs to become a utility. And the third is we're doing it in conjunction with participants across the ecosystem, with other shippers and with the regulators. So big change in big companies require pretty bold steps, and this is hopefully a live example of being really clear about our objective, which is digitizing trade. Being pretty radical, it's been radical for us, and hopefully, and I'm guessing for most of the industry, to have competitors collaborate to build a solution where they have nothing to gain from it. The only upside is going to be more trade. And the belief has to be more trade is going to be not just good for the participants in the trade ecosystem, but also the participants serving the trade ecosystem like the banks. So I know I'm going to take a few questions, and we've got a couple up here. So let me stop there and take questions, and put your hand up if you don't want to type a question up. How do you balance innovation and KPIs in an organization? You have to break out innovation in a large organization. If you make it, so there are two parts to it. The first is everybody has got some part of innovation in their day jobs. But equally, when you're doing something genuinely disruptive, you need completely different KPIs. Return on investment is not a measure I'm held to. So my team, the innovative projects, you don't measure on the same metrics that you measure a standard project, because otherwise you would never embark on something new. So you do have KPIs, but you have completely different KPIs, and you have ideally a ring-fenced budget to go try new stuff, to work with new technology and see what comes out of it. The bad outcome is if you're working on stuff that's a black box. So innovation isn't giving someone 3 years to go do something, because it's unlikely to be a silver bullet or one big idea that drives things. But you want to see a constant churn of output, and the learning cycle needs to work. So you have KPIs, but just a different set of KPIs. Blockchain is the future of banking. I'm biased. I think blockchain will be the future of banking. And in its heart, a lot of what the banking industry does is we serve as financial intermediaries between buyers and sellers, or in terms of clearing the market. There is a smarter way to do that than a centralized clearing system. We as an organization at HSBC believe that trade is the perfect use case, and that's where we're starting. But over time, it will drive a lot of change in the industry. But I think it's important to highlight blockchain is an underpinning technology. It's not a client-facing technology. The average customer does not care whether you're exchanging information on a distributed ledger or otherwise. And it's important that we realize that technology is an enabler. So it's easy to get caught up on the hype about blockchain. You can say blockchain and walk around and you'll have a bunch of people following you to find out what you're talking about. But the technology is only as good as the use case you're putting it to. And it's important we do that. Rahul Singh, don't take the last question. So I won't take the last question. You can catch me later and I'll tell you where ideas come from the organization, but from all over.
Thank you so much, Vivek. Sorry for cutting you off. Can I have a round of applause for Vivek, please?